Good Friday morning to you, and welcome aboard the Market Intelligence Brief. I'm Matthew Buckley, call sign with Top Gun Options. Let's go ahead and hit it. Vols climbing through the roof as the Bernanke and the president just simply fail to excite the market. So trading was slow, sluggish through the first half of Thursday, but the selling pressure really surfaced in the second half after investors got to digest the latest speech from the Fed chairman Ben Bernanke. Economic news very mixed. Weekly jobless claims up $2,000 to 414. Economists were looking for a decline of about 10 grand. That doesn't bode well. The trade balance actually narrowed thanks to record export of autos, airplanes, and other goods, so that's kind of a good as well. But the FOMC chairman pointed to the administration and said, hey, we need fiscal stimulus to assist growth. Translation QE3. And again, everybody knows President Barack Obama addressed Congress last night to push the jobs package. Don't even really want to get into it. It was a campaign speech asking for more spending on infrastructure, extension of payroll tax cuts, rinse, repeat, recession, in our opinion here at Top Gun Options. Now, although the Fed had pledged to help the economy as needed, he failed to offer any concrete details, for monetary stimulus. So collective disappointment hit the street. Dow Jones reflected that with 119 loss, and the tech-heavy NASDAQ lost ground. But more importantly, folks, the VIX, which is our barometer, our altimeter as options traders, simply went through the roof there. So hanging around, in the mid-30s, big spike yesterday, and again today we are up. 12.5%, almost 13%. So after the Bernanke speech here, and then after the president's speech, Vols going through the roof. Now, the Top Gun Options trading team saw some unusual options activity in the airline sector out to December. So let's pull up our options chain here. UAL yesterday had lost 60 cents. It's actually up 60 cents. So the trader looking at this one, let's pull up December. Activity was in the December 25 calls. Nice big block of about 4,400 calls traded hands at 38 cents. Now, this trade coincided with 2,200 D19 calls at yesterday. They were $1.85, and also 2,200 D30 calls all the way down there, which were trading yesterday at about 9 cents, and obviously they're up today. Still looking about 9 cents. Now, the same spread traded $1.19 800 times, and both of these spreads traded on the Amex. So interesting options activity in UAL. Now, in precious metal land, let's take a look at the GDX, the Market Vectors Gold Mining ETF. Rallied yesterday about $1.20 to 66.63, notched a new high Thursday after the yellow metal surged to nearly $1,900 an ounce, 1869 to be exact. Now, a noteworthy spread in the fund today is a three-way. Now, follow me, in which the investor bought 14,700 D50 puts. That's some money right there. So 14,700 D50 puts, and sold 14,750 D60-66 call spreads. Trader collected $2.79 on that entire package. Now, it probably closes some portion, opened about 2 weeks ago when one trader sold 44,200 GDX D50 puts to buy 29,500 D60-66 call spreads, collecting $1.9 million on that entire trade there. So shares are a little flat today, but shares are in the GDX are up 12.7% since that time. Since that last trade happened, and half the call spread, 33% of the puts are being closed out. So a very interesting trade here that we're going to monitor in our live trade services here, folks. Going to be an interesting day. Market is not looking too happy with the Bernanke, with the president, what's going on. So looking forward to happy hour. That's today's Market Intelligence Brief. Matthew Buckley, call sign Liz. Happy hunting. Make sure you hedge.